Hello, I'm Rafael Davis, and I'll be hosting today's show on Learning Local Live.
Extension on your phone.
Considering
Inventory.
Hello, everyone. As I said, I'm Rafael Davis. I'm a private mortgage lender, and I'll be hosting today's show. It's going to be a good show. We have a great show for you lined up today here on Learning Local Live. And our job here is to educate, empower, and inspire people by actually being able to cover and go over live deals and different topics. The show today is going to be great. Why invest in multifamily properties? If my tenants move out and I'm an investor, then there's my income. It walked away. But if I have 10 units and a person moves out or two people move out, I still got 80% of that income still coming in. Yeah, I'm vacant by two, but it's still going to come in. So that's the way I look at it, right? Vic Bell, there he is, real estate fund manager. I mean, if you've been anywhere online, LinkedIn, Facebook, just Google the name, you'll see Victor. So Victor's all over the place. A great guy, Victor Bell there. What's up, Vic?
Hey, how's it going? Thanks so much for having me today. I really appreciate it.
Yeah, absolutely, man. Absolutely. So glad to have you on the show today. And if you don't mind, can you tackle that first thing we just talked about? Like, why invest in multifamily? Like what do you
Wow.
think?
That's a that's a huge thing because first I like to do the distinction because anybody listening to the show, you're gonna fall into kind of two buckets. You're gonna either be buying a property for yourself or you're gonna be investing money with somebody else, whether you're a syndicator or fund manager or something like that. You're gonna be investing money with someone else. So there's two reasons that even though the reasons for using multifamily as a vehicle is the same, your goals may be different, right?
Right.
So for me, why invest in multifamily for us as a fund manager, allocating my investors capital and stuff like that for our company? Number one is capital preservation. It's like the goal of all investments is not to lose money. And to me, of all the real estate, single family, hospitality, warehouse stuff, retail, office, everything,
Right.
multifamily assets is probably the number one because basically people will always need a place to live. So capital preservation, don't lose money. Number two, cash flow. Number three, future appreciation, and then the tax benefits. So for me, when I'm thinking about an investment, when I'm talking about taking money from a bank, cash account, stocks, bonds, whatever, retirement accounts, if you're going to move money into a real asset and it's going to be real estate, it's probably going to be multifamily, one way, shape, or form. So that's very important to me as I'm looking. There's a lot more.
Right.
Like I said, depending on people's goals for buying the property itself. And it's the same as a buyer as it relates to investing your money there. But that's why I look at
Gotcha.
it 100%.
I'm glad you touched on the different types of multifamily because sometimes I get that a lot, right? And
Mhm.
being a lender, oftentimes people will come to me and they'll be like, "Hey, man, I'm thinking about getting a quadplex, right?" And they
Right.
they look at it from a loan perspective, right? So from a perspective, we can go 1 to 4 units. That's still considered residential. It's considered
Mhm.
residential. It doesn't get into the multifamily until five and up. And I was talking to someone the other day, and what made me think about it is he was like, well, I'm thinking multifamily too, but I'm thinking student dorms and different things like that. And it dawned on me like sometimes we have to like distinguish the different types of multifamily, whether it's
Mhm.
high rise, mid, garden, and different things like that. But before we dive too deep into that again, let me get ready to bring on our other guests. How you doing today, Adib?
I'm doing great, man. It's always good to see you. It's good to see you again, Victor, as well.
Hey, how's it going?
I,
Always.
I love when you guys tackle down properties and real estate, and then you come to me to fix them up or change them or add to them.
Hey, there it is, right? There it is.
Right.
Yes,
It's a good partnership.
yes, excellent, excellent, excellent arrangement.
Are you seeing a lot of that out there right now in terms of multifamily deals? Are you seeing people taking like 4, 5, 6, 7, 8 units and adding the ADUs to make it more in the multifamily space?
It's a funny thing because I have contractor buddies, associates that are dealing with certain aspects of the real estate and the remodel and the ADU marketplace. My experience currently is that I'm doing garage conversions. So I'm still in the residential sector, the single family residential sector, where garage conversions, whether they're attached or detached, are being converted into ADUs. So I'm
Oh,
into a lot of that at the moment.
gotcha, gotcha. Okay, okay. So converting the garages to ADU, so that's a hot thing here. So I know
Mm.
some years back, it just started to blow up. Vic, you being a fund manager, right, in the multifamily space, can you just tell us just a little bit about that and multifamily? Like, what's the benefits of, instead of me trying to go out and get a multifamily myself, but maybe I would invest with someone like you with a fund who, that's the main thing that you do, is you tackle the multifamily space.
Yes, sir. Yeah, absolutely. So the difference of it with, again, it's there's levels, right? Like
Hmm.
and multifamily is a vehicle. It's this is naturally they're considered alternative assets, right?
Right.
Because you can invest in stocks, bonds, retirement, gold, silver, crypto, blah blah blah. So, but to your point, if you are going to invest with someone, number one, if you're investing in a fund, we are a long-term investment. If you're investing in a syndicator, typically syndicators are in the deal for maybe 3 to 5 years, somewhere like that. And then they're going to either put in new financing or they're going to sell the property. So it's a little shorter. We're 7 to 10 years on the hold, even if we recapitalize by refinancing and paying our investors or keeping them in. So when we talk about stuff like, for example, the ADU play,
Mhm.
if you're looking at investing with somebody, that's their business plan. If you're looking for, similar to like the deal, that we're kind of using as a case study today, that was a deal that somebody got. They converted and added on a few more units, and it's called highest and best use. And then they brought that up. So naturally, if you're an investor in that deal, short term, you're going to put your money in that deal. They're going to do what they do to it to raise the value, and then they're going to sell, which is what they're doing, or they're going to refinance, pull their money out, and do something long. So investing with a syndicator or fund manager, that needs to be their business plan. All right. But that being said, worst case scenario, if you want, we can spill right into that. So people can kind of get a visual. It's always good for people to see stuff, because if you're going to
Right.
invest your money, whether you're doing it yourself or with somebody else, the business
Mhm.
plan matters, the real estate deal matters, and naturally, like, the person executing the business plan matters too, to your point.
It's a local opportunity of the week. It's out in Point Loma, and this deal right here, 2053 Chatsworth Boulevard, excuse me, is actually currently on the market. Right, so let's dive into that. This is like the property that I spoke about earlier, right?
Mhm.
Where they actually went in and they added 4 ADUs to this property
Mm.
just this last year. And they added the ADUs to this property this last year. The property is actually currently on the market. So it's a 9 unit multifamily property. It's currently on the market at 3.5, I believe.
Yeah, three and a
Um,
half. That's what it looked like when I saw
yeah,
it too.
yeah, three and a half. There it is. Okay, there it is. The offering price. There it is. 97% occupied. And there's the current NOI. Right. So, what are your thoughts?
As an investor, I mean, for me, like, I have a couple of different things, what's called a buy box for a fund manager or syndicator, like when we're going off to look at deals. So that way we don't kind of get like,
Mhm.
scatterbrained looking at every deal across the world.
Right.
But it doesn't fit into our buy box as it relates to raising money and
Hmm.
bringing it to a deal. But is it a great deal for somebody? Absolutely. I mean, every deal, right? There's a saying we always say, like, there's an ass for every seat. So this this deal has to be, a seat, and some ass is going to fit into it for that purpose.
Right.
Um, but I think, because I drove the property, just because I look at all properties, and naturally, like, and this is good for people to understand when you're dealing with someone like myself who's a fund manager or manages a fund in other people's capital. Um, so the scenario about this is that I drive properties. If they're in my market, I want to know what's selling, what's trading. Sometimes it's in my buy box, sometimes it's not, because I'm looking for specific things about locations. So for this deal, location is great. I mean, it's not a
Right.
Point Loma thing, because there's locations inside of locations, because there's parts of Point Loma I don't like.
Right.
But then there's a part where you turn the corner and you go, wow, this is nice. And that actually is there. So, anybody looking for a deal like this, because this deal is kind of more probably going to be seen as more of a stabilized deal. This will be more of a turnkey opportunity for somebody, in my thoughts.
Right.
That it's already been done. and for the most part, there's an asking price. There's a price per door. For the age of the property, that's kind of what it is as it relates to, and I'm sure Adib could speak to this. There's a age built, and then there's a renovated age on that property, right? So like it's been functionally renovated is what I'll say, rather than kind of use the big fancy words of what that is. So there's a physical age and there's an economic age, to go from there. So
Right.
with this thing being renovated within the last year, economic age wise, it looks to be decently new as it relates to, it looks like they did the windows. They might've done the roofs. They might've done all that, as well as they've added additional 4 dwellings to this place. So they've pushed it up to highest and best use as it relates to somebody taking a look at it just from a sheer real estate scenario. It's highest and
Right.
best. Its economic age has already been brought up to par, even though the physical age is a little bit older. The location is sick. All the properties
Right.
around it, all the properties around it probably range in that maybe 700 all the way up to $1 million range, and probably past there if you push maybe about 5 miles out, or somewhere in between 2 to 5 miles out. That's the
Right.
question. It's right down the street from a high school. So when I'm looking at those things, that's all I care about first. Before
Right.
I look at numbers, before I look at purchase prices, do we even want this as an asset to park my money in? Because you're taking your money out of the bank and putting it into some other place. And like we said, if number one is preserve capital, will this building itself preserve that capital? Could it be destroyed? Could the
Right.
neighbors tear it down? And it's a great spot for somebody looking for it.
Looking at it, that's the first thing that popped up on me was the location.
Mhm.
Adib, what do you think about the ADUs? Like them adding 4 ADUs? I think they're off from the main structure, right? So the 4
Mhm.
ADUs in the back. How valuable do you think those are?
Well, I was just going to say the numbers that we're looking at. I think it's 611. If you flash that on the screen again, I think it's 611 per square foot value. That is post construction. I would assume that that's after they've added the ADUs. Do you happen to know what the square footage is on those ADUs? Does it
Uh,
say in any of the data?
yeah.
It
So
did.
I want to say 300 square feet in the back.
Okay,
So it's like a one unit, 1 bedroom, or like a studio
studio.
and one
Got it.
bedroom. Yeah, studio, 1 bedroom at 300 square feet.
So when you're looking at situations like this and you want to move in that direction as an
Mhm.
investment enhancement on a property, then you want to look at what is that cost and how can you incorporate that cost into your overall cost per square footage, and then what is your return? What is the market going to bear for you? What kind of 5-year, 10-year investment return are you looking for, and so on and so forth. So my opinion and my position is yes, I have not seen in the last 10 years, when ADUs really started to perk up, I have not seen in the last 10 years anyone go wrong with buying or investing, building, creating a junior ADU attached to their home, or individual standalone ADUs such as this
Mhm.
as an investment vehicle. I had one client, in fact, that is looking at building out about 8 ADUs on a property that he has that's near a lake, and ran all the numbers, did all the construction costs, and it's going to be a great investment. It's a great location. It's going to be great for people that want to come and go out there and fly fish and do all those kinds of things. Can't go wrong. So,
Right.
I wouldn't have anything bad to say about creating an additional living space on a current real estate property. That's a win.
Once you have this investment strategy and you have your certain buy box, I think that's where everything falls into place. So like if you look at this and that cap rate at being 5.3 right there, if it's in your box, then I think this is what you start to look at and how you start to go about it. So you look at the
Right.
cap rates for the area, right? And then you start looking at the location, which Vic touched on earlier. When you look at those things, and then you don't worry about whether it's cheap or
Yeah.
expensive or whatever, you're looking at the return on your investment. Me looking at it, I think it would be a great investment. Getting new to multifamily, everything checks off. If I'm going to be lending on a property like this,
Hmm.
those boxes are checked. This particular property also, not only could you um, get a loan or something like that from a person like myself, but I believe assuming the current loan is also an option on this particular one, which is it's at a fixed rate for the next 3 years. Not to get too much in that because we really want to focus and look on the property itself.
In this whole strategy is, and I've said this a number of times before as well, you always want to make sure when you're going to do any kind of construction to not cut corners. No other way to say it. So don't cut corners on anything that you're going to build or add to your existing property. You want to get yourself a verifiable, professional, upstanding contractor, architect. You want to file all your permitting. You want to do all of those things, cross all those T's, dot all those I's. Because when you do, you secure your investment. I can't tell you how many times that my office has been called in when someone has converted something or built something on a property. They didn't get permits for it, and now it's a tear down. It's a waste of money instead of an investment. So always, when you're moving into these strategies, for me as the general contractor, my advice to this group and to this audience is do it the right way. Follow all the T's, cross all the T's, dot all the I's, follow all the rules. Get yourself a good contractor, architect, and couple that with good finance people and good advice from your realtor, and it's a win. You can certainly win in that marketplace.
Gotcha. Vic, what's your take on the current state overall for multifamily? What are you thinking?
In 10 years, you will wish you had bought everything you could have got your hands on.
There you go.
I promise.
Because we're wishing that right now, Victor.
yeah. Like so a lot of these deals. Now, I'm not saying they pencil. I'm just saying that if something pencils, even if it's like there, I'm not saying to go risk and lose. I'm talking about calculated watching. And this is a market insight. With everything going on in the market right now, with the Feds pushing to raise rates, not raise rates, if they, like a lot of people are sitting on the sidelines, as things begin to move, when you're thinking about yesterday's pricing, which is what you were talking about. But this is an investment. You're not buying a shirt or bicycle. You're buying an investment. So if that deal cash flows and you can hold it and you collect assets over the next 10 years, because this is what the market, this is the market correction that we saw years ago. This is also similar to what happened in COVID. This is 2008. Just we're all living it at the same time, so it doesn't seem so detrimental. But I promise you, you're going to look back on your life and you're going to be like, man, I wish I would have got my hands on every piece of multifamily real estate that fit into my box in San Diego County, 100%. And if you don't do it, I promise you'll look back and you're like, shit, I screwed up. Sorry about the language. So, so as it relates to the market is concerned, that's my insights. Pay attention to the market, buy the right asset. Every asset's good if you can hold it, but make sure that you move forward with that because the market is starting to move again and things are coming available. So thank you guys. I appreciate that. I know we didn't have a lot of time today, but thanks for definitely having me.
Right. Absolutely. Same here. It's wonderful to have a conversation like this, on real things that we've done, experienced, deal with on a daily basis. For anyone that's looking for a real talk or real conversation about what they want to do, this is it. There's no fluff. There's no fly. There's no flower. This is the real deal.
People have that as a strategy. Look, man, I just need to look. I need to find that one deal. The good thing about you having a fund and everything is, hey, if you got the money, all you have to do is just dump it into his fund and then kind of like sit back and collect, right? Which would be ideal. And that's what we would want. So if any investor out there is watching and you're looking to get into the multifamily space, make sure, look at the numbers, make sure the numbers match based on your investment strategy. I can't give you the exact strategy to have because everyone's strategy is different, right? Everyone's strategy is different and it depends on what you're looking for and what you're looking to do. So what may be good for one person may be bad for the next person. So with that, okay. Oh, one other thing, make sure the location is right. Go and drive it like Victor does and figure it out. Victor, closing remarks.
Yeah, definitely. You know what? Invest in multifamily, period. Like at some point, if you don't know and you learn this business, educate yourself on it. But the easiest way to become an investor is to invest. That's how you do it. reach out to myself. You can go to bell-capital.com. We are having an investor event coming up next week on the 21st at our offices. You got to be accredited. You got to be liquid. You got to be serious. So it's a little bit different, but you can go to bell-capital.com/RSVP, and one of us will reach out to you, add you to the list. This is just for people who are interested in investing money, and you can see what we do, why we do it. But it's important for you to get around people. Your network is really your net worth, and real estate is a contact business. You can't do it from a Zoom. You got to get out there in the market and play this game, but it will take care of you and your family for generations. I promise you, if you invest.
Okay, guys, anybody out there watching that, may want to be a part of this new setup that we're having right here. You can be on here. You can be one of the professionals. You can sit in this seat where I'm sitting. You could host, and it's all things real estate. I'm not sure when the next show is going to be coming up, but it won't just be multifamily. I was excited about the multifamily again because I'm still learning that. So we'll be doing single family. We'll be doing wholesaling. We may even have shows about land. So if this is your expertise and you're in that field and you're a professional, please, learninglocal.com. Come through, join the show, join the conversation, bring your expertise, and we would all love to have you here. Hey, you guys, thank you very, very much, and have a great day.